Did you know that regression is one of the most popular mathematical model that institutional traders use in algo trading? In this video, I want to introduce an advanced indicator on TradingView that is built based on regression. In case if you don't know what regression is a statistical model that tries to estimate the value of a variable based on the value of another variable. It's a predictive model that is used in finance and investing for estimating the future value of a variable. It's a linear approach, and because of this, it's a perfect choice for calculating trends. I don't get into more details regarding regression. You can search in Google and you will find many websites explaining regression. Alright, now let's add the regression indicator to our chart. Here we click on indicators and we search regression indicator. This one, which is written by Big Beluga. Alright, this is the indicator, and as you can see, we have it on the price chart and also here below the chart. First, I explain different components of this indicator and how you can use it for trading, and then I will teach you a very accurate trading strategy based on this indicator, so make sure you watch this video until the end. As you can see, we have a line here that is overlaid on the price chart. This is regression line and it has a similar behavior like moving average, so it can be interpreted like a moving average line. Having the price above the line shows an uptrend and having the price below the line shows downtrend. The line also changes color between blue and white depending on being an uptrend or downtrend. Similar to moving averages, in an uptrend the line can act as a support level, and in downtrends the line can act as a resistance level. And in times that the price crosses the line, it can be a signal that direction of the market is changing. Never take a trading decision only based on these price crossovers, because you can encounter many false signals, especially when the market is in a trading range. So make sure you have reversal confirmations from other indicators or aspects of technical analysis if you want to use these price crossovers as a trading signal. Alright, before I explain the oscillator part, I want to tell you something. As you know, on TradingView, on the free version of TradingView, you can add only 2 indicators. So if you want to test a trading strategy with more than 2 indicators, you have to buy a subscription. But instead, you can go to another trading platform, which is FastBull.com, and it offers a trading platform exactly similar to TradingView, but everything is free. You just need to go to here in products and then click on charts. And here we go, a trading platform exactly similar to TradingView but no limitations. For example, let's go to indicators and search MACD. This one, moving average convergence divergence. Here you can adjust the settings and here it is. Let's add another one, for example RSI. This one, you can adjust the settings, and here our RSI. Consider you also need ADX. This one, average directional index. You can easily adjust the settings, and here it is our ADX. You need also Bollinger Bands, no problem. You can simply add it to your chart. Just give it your desired settings and it's done. You need more indicators, no worries. You can add up to 64 indicators per chart at the same time. If you want to monitor different assets at the same time, there is also no limit on this. Here you simply click on this plus sign that creates new chart, and for example let's add Bitcoin, and here we have Bitcoin chart on another tab. Or let's also have the price chart of gold. Here it is. And in this tab, we have the price chart of gold. Any asset that you need its price chart, you can simply have them here on different tabs. And the good point is that you can have different indicators on different tabs. And for each chart, again, you can add up to 64 indicators at the same time. So for example, if for Bitcoin, you need to have ATR on your chart, you can add it to your price chart. Or another indicator, for example, you need also awesome oscillator. You can add also this indicator. So you can easily add your desired indicators for each asset separately, and you can also set up your desired layout from different options available here. The links of their platforms are in the description, and make sure you check it later. Alright, getting back to our indicator, now let's go to the oscillator part and see what we have here. This line is regression oscillator, and you can see that it's moving above and below the center line, which is 0. When the line is above the center line, it shows an uptrend, and when the line is below the center center line, it shows downtrend. So center line crossovers are also potential trading signals because they can show trend changes in the market and beginning of a new trend. The indicator also shows the signal by the help of these small circles that you can see. They are also shown on the price chart, but please pay attention that just like any other oscillators, center line crossovers are very prone to be false signals, and if you want to use these signals, you need to have more confirmation from other indicators or aspects of technical analysis. The best use case of this line is trend identification, and it does it perfectly. This line stays very stable during large pullbacks. You can see that during this large pullback here, we didn't have false signal from the oscillator, and the line stayed consistent until there was really a change in the trend. And even during times that the market is flat, like here in this part, the indicator tries to stay in that position until there is a sign of really a change in the market. This characteristic of this oscillator makes it a perfect choice for trend following strategies, in which by the help of this indicator you identify trends, and then by the help of another buy sell signal indicator you enter in positions that are in the same direction with the direction of the current trend. We have also another line here which is signal line, and it is used for generating signals based on the crossovers of this regression oscillator and signal line. This indicator only shows the signal for the ones that are reversal, and they are shown by the help of these small circles. For example, here regression line crossed above the signal line, but both of them are below the center line, so this is a bullish reversal signal. These signals are more risky in compared to the ones that are in the same direction with the trend, like this one here where the regression line crossed above the signal line and they are above the center line. So this is a bullish signal within an uptrend. This is a lower risk trade entry in compared to reversal signals. To show you another example, for example here you can see that we have a bearish crossover while the oscillator is also showing downtrend. Or another example we have here, you can see that we have a bullish crossover and the indicator is also showing an uptrend. If you're gonna focus on crossover of regression oscillator and signal line, it's better to focus on these ones that are in the same direction with the current trend. These signals have lower risk in compared to the ones that are against the trend. Alright, now I want to add another indicator to show you a trading strategy based on this indicator. One bad point about this indicator is that it is still vulnerable during flat market because it is not able to tell you if the market is not trending. It just tries to stay consistent as prior trend until a new direction is established in the market. So for example, if you have a sell signal around here, this indicator may confirm it while the market is not actually in a downtrend. So it is important to have another indicator that can help us with these kinds of situations. Here we click on indicators and we search Andean oscillator, this one, which is an editor specs indicator and written by Alex Grover. Alright, this is a very powerful trend indicator that can help you with identifying trending and non-trending market. When the orange line is above the other two lines, it tells us that the market is not trending. When the green line is above the orange line, it tells us that the price is advancing, and when the red line is above the orange line, it tells us that the price is declining. So crossing of the red line above the orange line can be considered as a sell signal, and crossing of the green line above the orange line can be considered as a buy signal. And by the help of this regression indicator, we can confirm the signals. When we have a buy signal, which is when the green line crosses above the orange line, here the regression oscillator should be above the center line. So here the buy signal is confirmed. But for example, this buy signal that we have here, this is not confirmed because as you can see, the regression oscillator is below the center line. And when the red line crosses above the orange line, the regression oscillator should be below the center line. Here you can see that at the same time, we had also the regression oscillator closed below the center line. So this sell signal here is also confirmed. You can clearly see that in times that the market is flat, this indicator is helping us to stay out of the market until a considerable momentum is building in the market. For example, here you can see that the red line crossed above the orange line after this flat market, which is also indicated here where the orange line was above the other two. And this sell signal here is also confirmed because you can see that the regression oscillator is below the center line. This regression oscillator is a very powerful trend indicator that tries to stay consistent during non-trending phase of the market and not repeatedly oscillating above and below the the center line, but still it can be misleading when you have buy sell signals because it can falsely confirm the signal. So there should be another indicator that can help you with non-trending markets, so you can enter positions only when there is higher probability that the market is really trending. Please pay attention that no indicator or trading strategy can give you 100% guaranteed signals. This is not possible in reality, and you need to manage your risk properly so you can become a consistently profitable trader. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.